studying your last two. I swim with tea when they turned in. The staring down to mute and can lend a pole that some kid died.
If you've ever wondered whether you need to file Form T1135, this simple decision guide will help you find the answer. Instead of memorizing complex tax rules, you only need to ask yourself 3 questions. The first question is, are you a Canadian tax resident? T1135 is generally required only for Canadian tax residents. If you are not a Canadian tax resident for tax purposes, you generally do not have a T1135 filing requirement. If the answer is yes, move to the second question. Do you own specified foreign property? Specified foreign property includes certain investments and assets located outside Canada, such as foreign bank accounts, foreign shares, foreign rental properties, and foreign investment accounts. If you do not own any specified foreign property, then you generally do not need to file Form T1135. If you do own specified foreign property, move to the final question. Does the total cost amount of all your specified foreign property exceed 100,000 Canadian dollars at any time during the year? Notice that the rule refers to the total cost amount, not the market value. You must add together the cost amount of all specified foreign property that you own. If that total exceeds 100,000 Canadian dollars at any point during the year, a T1135 filing is generally required. The green panel on the left summarizes situations where filing is generally not required. If you are not a Canadian tax resident, if you do not own specified foreign property, or if the total cost amount of your specified foreign property is $100,000 or less throughout the year, you will generally not have to file Form T1135. The orange panel on the right shows when filing is generally required. If you are a Canadian tax resident, you own specified foreign property, and the total cost amount exceeds 100,000 Canadian dollars, then you should generally prepare and file Form T1135 with the Canada Revenue Agency. The decision tree in the center is designed to simplify the entire process. Rather than trying to remember dozens of detailed rules, simply answer these 3 questions in order. They will guide you to the correct filing decision in most beginner situations. The key takeaway is easy to remember. Canadian tax resident, specified foreign property, and total cost amount over $100,000. If all 3 conditions are met, Form T1135 is generally required. In this slide, we'll answer some of the most common questions people have about Form T1135. These are the questions that taxpayers ask most often, and understanding the answers can help you avoid common reporting mistakes. Let's start with the first question. Should I use the market value or the cost amount of my foreign property? The answer is the cost amount. T1135 reporting is based on the tax cost of the property, not its current market value. Even if an investment has increased significantly in value, the filing threshold is still determined using its cost amount under the Income Tax Act. The second question is about vacation homes. If you own a foreign vacation home that is used primarily for your personal enjoyment, it is generally not considered specified foreign property for T1135 reporting purposes. However, if the property is held as an income-producing investment, different rules may apply. Next, many people ask whether foreign bank accounts must be reported. The answer is generally yes. Foreign bank accounts are one of the most common types of specified foreign property and are usually included when determining whether the T1135 reporting threshold has been exceeded. What about foreign shares or investments? Again, the answer is generally yes. Foreign shares, foreign mutual funds, foreign exchange-traded funds, and many other foreign investment securities are commonly reportable as specified foreign property. Another frequent question is about filing late. Failing to file T1135 on time can result in penalties. That's why it's important to review your foreign assets every year and file the form on time whenever it is required. Finally, one of the biggest misconceptions is whether filing Form T1135 means paying more tax. The answer is no. Form T1135 is an information return, not a tax return. Filing the form by itself does not create additional tax. Its purpose is simply to disclose specified foreign property to the Canada Revenue Agency. The reminder at the bottom summarizes the most important idea from this entire lesson. T1135 reports foreign property. It does not calculate tax. Whenever you're unsure about a T1135 question, remember these core principles. Use the cost amount. Identify specified foreign property. File on time if required. And remember that the form is designed for reporting and disclosure, not for calculating additional tax. In this final slide, let's bring everything together by looking at a simple annual checklist for filing Form T1135. Preparing a T1135 doesn't have to be complicated if you follow the same process every year. The first step is to review all of your foreign assets. Start by identifying every item that could qualify as specified foreign property, such as foreign bank accounts, foreign investment accounts, foreign shares, or rental properties located outside Canada. Next, determine the cost amount of each foreign asset. Remember, the reporting rules are based on the cost amount under the Income Tax Act, not the current market value. Once you've identified the cost amount of each asset, add them together and compare the total with the 100,000 Canadian dollar threshold. If the total cost amount exceeds $100,000 at any time during the year, you will generally need to prepare Form T1135. The next step is to complete the form by entering the required information for each reportable foreign property. After that, file the completed T1135 together with your T2 corporate tax return if you're filing as a corporation. Finally, keep supporting records. Maintain documents such as purchase records, account statements, and other evidence that supports the information reported on the form. Good record keeping makes future filings much easier and helps if the CRA ever requests additional information. The panel on the left highlights several good habits that make annual filing much smoother. Keep an up-to-date list of all foreign assets. Retain purchase and transaction records. Update cost amounts whenever necessary. And review everything before tax filing season begins. The panel on the right shows some of the most common mistakes to avoid. Don't use market value instead of cost amount. Don't forget foreign bank accounts or brokerage accounts. Avoid filing after the deadline. And make sure your documentation is complete and well organized. The message at the bottom summarizes the entire process perfectly. Think of T1135 as an annual foreign asset checklist, not a tax calculation form. Every year, simply review your foreign assets. Determine their total cost amount. Check whether the reporting threshold has been exceeded. Prepare the form if required. File it on time. And maintain accurate records. If you consistently follow this checklist each year, T1135 reporting becomes a straightforward compliance exercise rather than a stressful tax filing task.